guys, it's Ariel
And Jason.
with Fix My Books. And as promised, we are going in depth with each of the sections on how to close a CCPC or Canadian Controlled Private Corporation. So, this is part one where you should review your corporate documents. So, I know we touched on this previously, but again, the overview was already like 15 minutes long. So, that's why we didn't want to do like a 3-hour webinar for you guys. So that's why we broke it down in like little pieces.
Digestible chunks.
Yeah. And we'll be, releasing, a video once a week until we complete the series. So with that being said, let's get started. Okay. So the first part of reviewing your corporate documents is actually ensuring that the corporation's minute book is up to date. And again, if you don't know what a minute book is, then we suggest you look into Owner, ownr.co. We'll have them linked down below. It is an affiliate link, and you will get a 15% discount if you sign up through that link. Owner can help file this for you guys.
Yeah, so if you don't have a minute book, you've probably set your corporation up through, Corporations Canada, whatever, and you're probably missing a whole bunch of these documents. So they may apply to you, you may have to find different resources, but generally this is the theme that you're going to have to follow.
Okay. So documents and records to include in your minute book would be obviously your articles of incorporation. So a lot of people don't know what these are actually when we ask for them.
So we get a lot of people onboarding into our company for bookkeeping services and taxes, and they don't even know what this is, articles of incorporation. And that's because, like we said, they've probably set their company up through the government, and whilst it's cheap and whilst it may feel quick, they don't give you everything that you really need, and technically you are meant to go to a lawyer to have this drafted, which is why we always try to just recommend newbies with Owner, and that's because they just get everything. It's very simple. They may not need a crazy articles of incorporation or bylaws or shareholder governing documents, because they're just the only person in the company. Right, so they don't need all that stuff. But articles of incorporation and amendments, these are the foundational documents of the corporation detailing its creation and any changes to the structure or purpose. So if you see these, they're very long. They're usually, they can be like 20, 30 pages long sometimes, in addition to the corporate bylaws, which Ariel will get into now.
Yeah. So what are corporate bylaws? So these govern the internal management of the corporation, including the roles and responsibilities of directors and officers. So honestly, not a lot of small businesses put a lot of time into this. And so that's why we recommend Owner, because this just comes when you register a corporation with them. But just make sure that you include these in your minute book.
Yeah, if you do set up a company in the future, do make sure that if you are going to have several different shareholders you don't know, as well as friends or relatives or random people that you aren't very familiar with as directors or officers within the corporation, make sure that these are done correctly. And the reason why is because as much as you don't think it's going to happen, we see it all the time. There is a lot of infighting between friends, relatives, acquaintances, etc. It is more common than it is not. So make sure these documents are done correctly, and so that everyone can agree on their roles and responsibilities.
Mm-hmm. Okay, next is the minutes of shareholder meetings. So it records all of the decisions made by the shareholders, including the annual general meeting and other special meetings. Most small businesses don't have an annual general meeting or anything like that.
But you are required to, and in the United States, it's very common that this is also neglected, but it is very, very much required as well. Especially if you're going to do things like, say you have a corporation and you take regular salary, regular payroll, and you decide to pay out a big bonus at the end of the year. or some sort of weird payout event, then this actually needs to be recorded in the shareholder meeting minutes. And most people don't do that, but if that is your situation, please do it. It takes 5 to 20 minutes. So documents and records to include in the minute book. These are the other ones. So minutes of directors' meetings, so record all the decisions made by the board of directors. This one is a lot more common. Sometimes banks will require, an example of this document. So you may have encountered it 1 or 2 times before, but when it comes to closing the corporation, you're going to need the directors to kind of sign off on closing the corporation, obviously. Shareholder resolutions, written resolutions signed by all the shareholders, often in lieu of meetings, and very similar to the previous documents. And then you've got the directors' resolutions, which again, they're all very similar documents. There are templates available online for a lot of this stuff. ChatGPT is actually very good at this stuff. So if you do need one of these things written, and it doesn't need to be written in such complicated legalese because it's just you in the corporation, you may want to consider looking at ChatGPT as well, so that you can have this included with your documentation. But if it's stuff that needs to be filed, you do actually need to file it.
Yeah. And we just want to say that this is not legal or tax advice. This is just for general educational purposes only. So if you are planning to close a corporation, talk to your legal advisor. Okay. Next is unanimous shareholder agreement. So if you have them, please include them. Special declarations, again, as Jason mentioned, if there are any special dividends or bonuses that you declared, you should include them, as well as any financial statements. So financial statements are different from tax returns, people. I just want to say that. So there are 2 different kinds. One is at year end, and there are interim financial statements. So
sometimes every 6 months.
Yeah. So if you have those, include those as well.
And obviously, it wouldn't be signed off by your accountant. It would be signed off by a member of the board. So probably you.
Okay. So common issues or omissions to look out for when it comes to these things. So number 1 is missing or incomplete records. Again,
this is probably you.
This is probably most small businesses. So most small businesses do not have all of these records, again, because to comply with this is quite expensive, honestly. So just ensure that all the required documents are present and fully completed. Missing minutes or resolutions can indicate non-compliance. Number 2 is outdated information. So verify that all records are current, including the register of directors and officers, and that any changes have been properly documented. So if you added a director or removed a director,
or you moved house,
yeah,
right? You changed your address, you changed the address of the business, you changed one of the director, a shareholder address. These things all need to be updated before it's closed.
And then next is unsigned documents. So you ensure that all minutes, resolutions, and agreements are signed by the appropriate parties. It's not legally binding if it's not signed, so there's no point in having it there if it's not signed. So I know it's a lot of paperwork, and you might miss a document or 2 because there's so much paperwork.
But that's why we made that list, so you can just go, okay, I have that, I don't have that, I need to get that, etc.
Next is inconsistent records. So check for consistency across documents. You can't have, one person being named the director and then the next document they're the secretary. If they're both, that's fine, but you can't just change their designation.
It reminds me of a company that we dealt with where they're trying to say that 2 people were the shareholders of this corporation, but yet on the shareholder registry there was just a single person and they just owned this company, and the other person had no idea they didn't even own the company.
Yeah.
So just make sure that what's being filed is actually correct, what's on the paperwork is actually correct, and that it all makes logical sense. Because if it doesn't, and you're saying that, oh, this person's a shareholder, but there is no record of them having a shareholding, it's going to lead to a lot of issues.
And also, just because you're a shareholder doesn't mean you're a director.
Yeah,
okay?
that's another thing.
And just because you're a director doesn't mean you're a shareholder.
They're mutually exclusive things.
You can be both, but it's okay to be one or the other.
Yeah.
A lot of people get confused, so just note that.
And this has nothing to do with, operations, so it doesn't mean CEO, and it doesn't mean, COO or CFO.
It's more of like director's like responsibility, and shareholder just means like you own the corp, right?
Yeah,
like
so
you can be a shareholder of Apple with buying one stock, but you're not the director of
you're
Apple.
not the director of Apple.
So just note that. And then also lack of documentation for key decisions. So you have to ensure that significant corporate actions such as the issuance of shares or major financial decisions are properly documented.
Yeah, so just because you decide to issue shares to someone and say, oh, I'm going to issue these shares to you and take money from them, which we've seen before, this has happened. If this isn't actually registered, that person doesn't own anything. They've just given money to you.
It's a loan.
Yeah. So, review corporate documents. Review the corporation's articles of incorporation, bylaws, and shareholder agreements for any specific dissolution procedure. So this will be, there'll be a specific clause. Like if you look at the table of contents, if it has one, it probably is long, so it may have a table of contents in either the bylaws or the shareholders agreement. There'll be some sort of like computer-generated dissolution procedure or one that's been written by a lawyer that you will need to follow, and make sure that you follow that. So if you don't have that, then what you need to do is you need to go to look at what the actual laws are in your province or territory to make sure that you follow those.
So we next after that would be the review for any specific dissolution procedures. Again, these can be in different forms, like dissolution clauses. So these are provisions outlining the process for voluntary dissolving of the corporation, including any required approvals from shareholders or directors.
And make sure you follow that, because it can be a legal issue if you don't.
Next would be the distribution of assets. Maybe it will say, the corporation's assets have to be distributed upon dissolution within 90 days. There are like things like that. So just make sure that you follow those. The last thing you want is to be non-compliant. And next, again, is the notice of requirements. So we mentioned this last time, but there could be certain requirements for notifying the shareholders, creditors, and other stakeholders about the dissolution. Again, they could require maybe like 90 days or 180 days in advance. So it really depends on what is written. Just make sure that you follow it.
Yeah, don't close the corporation and then tell everyone, oh, by the way, you're all out of a job.
Yeah.
Yeah, they'll probably sue you for that.
Okay. And then voting requirements. So specific voting requirement thresholds may be needed to approve the dissolution. So maybe you need like 2/3 majority of the board or something like that to approve it.
Yeah,
so even if, let's say, 51% like agree, that may not be enough.
Yeah, then there'll be stipulations for both the board and the shareholding as well. So just make sure that you follow those. And finally, filing requirements. Instructions for filing dissolution documents with the appropriate government authorities, such as the Articles of Dissolution. And this will probably just follow the provincial legal guidelines.
Okay.
So common dissolution procedures typically outlined. Board resolution. The board resolution, directors must pass a resolution recommending the dissolution of the corporation. You've probably seen a board resolution before. You can look up examples of this in like ChatGPT or online. There's thousands of them. Just Google it. They're all very much similar, unless it's a big company and they've got a very specific way that they're going to word it. You can use those if you want to. It's up to you. Or contact a lawyer to see what they recommend for your corporation. Shareholder approval. Shareholders must approve the dissolution, typically through a special resolution. So obviously you can't just close a so say that you have 30% ownership of the corporation. You can't just go as a shareholder and say, I demand to close the corporation. This isn't like the Michael Scott I declare bankruptcy situation. You can't do that. So you need to get approval from the shareholders, and not even just the board, also the shareholders. And you'll have to notify your creditors. So creditors must be notified of the dissolution and given an opportunity to make claims against the corporation. And that's because, if you owe money in the corporation,
so you have to tell the bank. If you have a bank loan, hey, we're planning to close the corporation. If you have suppliers you owe money to, like accounts payable, you have to tell them, hey, we're closing the corporation. They need to be able to make claims and, get paid and things like that.
And the last thing that you want to happen is their ability to pierce the corporate veil and then go after you personally for any of these sort of tax.
There is something called director's liability, so just take note of that. Just because you close the corporation doesn't mean that, anyone you owe money to cannot go after you.
Yeah, so always just make sure you notify people correctly and follow the rules.
So again, settlement of debts. You have to pay your debts before you distribute any remaining assets to shareholders. So, for example, there's $100,000 left in the bank, but you have $90,000 in debt. You can't just distribute the $100,000 to the shareholders.
Or to yourself.
Yeah, you must pay the debt before you distribute any money to the shareholders. And again, after settling your debts, any remaining assets are distributed to shareholders according to their shareholdings. Again, this ties back to the accounting of equation of assets minus liabilities equals equity. So after you pay all your liabilities, then that's what basically you own in the corporation. And then last is filing the articles of dissolution. This is the final step that you actually have to do. So this is exactly the opposite of filing the articles of incorporation. So the articles of incorporation start the company.
The birth of the company, and this is the death certificate on the company.
Exactly.
So specific legal or tax implications to consider. So the tax clearance certificate that we talked about before, which is the TX19, before distributing any assets, obtain the clearance certificate from the CRA, Canada Revenue Agency, to ensure all taxes have been paid or secured. The last thing you want to do is try to close the corporation or distribute any assets before taxes have been paid. I mean, this is the same thing that happens with estates. So you need to clear out the obligations of the estate first, and then the assets are distributed. So failure to obtain this clearance certificate can result in personal liabilities for directors and officers, and just like an estate where you have a trust, the executor would be the one that would be liable here. And then we've got capital gains and losses, so review the tax implications of liquidating assets. So if you do sell, say the company owns a bunch of stock, just as an example, stock or gold, and they sold the gold and it was at a profit, you're going to have a tax implication there that is going to need to be paid, hence why you're obtaining this clearance certificate.
But again, as you can see with the tax clearance certificate, it can result in the personal liability for directors and officers. So just be careful. Just because you think, oh, it's a corp, they can't run after me. Wrong. They can run after you.
Wrong. Definitely wrong. And final tax returns ensure that all final taxes are paid, including corporate income tax, GST, payroll tax returns. And we want to specifically highlight here GST and payroll tax returns. These are trust accounts with the government, meaning that money was held in trust by you and owed to the government. And what's going to happen is if you don't pay those, they will definitely go after you personally.
Yep. And so, for example, if you're closing the company in June and you had payroll, let's say this 2024, make sure all the T4s are filed before you close those accounts.
Or you're going to have a lot of
Yeah.
angry employees that are
Yeah.
all getting audited.
Yeah. So just, little things like that, timing differences and issues, make sure you're compliant. So next is employee termination. So address any legal obligations related to terminating employees, including final pay, severance, and benefits.
This is a big one.
But that doesn't just end there. So if you have a company pension, just because you close the company doesn't mean that you're not going to pay out their pension. So there are things that have to be still paid even after you close the corporation. So just take note of that.
If you do have payroll, we would strongly advise you get legal advice here. If you do not cheap out on it, it could save you a big headache in the long run.
Yeah,
a big headache.
I've
the
seen
amount
one,
of companies that we've dealt with where they don't deal with this properly, and then the employees, they may turn around and sue them.
Oh yeah,
and it gets incredibly. They could have been friends their whole lives, but as soon as money is in the equation, everyone gets angry. So,
I've seen one where they sued each other. It was crazy. And I've seen
it's the last thing you want to be
I've
involved
seen
in.
it get really dirty. So make sure that you are compliant with all of these. And then last would be legal obligations. So any obligations under the Canada Business Corporations Act or relevant provincial legislation, including the continuation of certain actions post-dissolution. So this is what we mean. Just because you dissolve the company doesn't mean you have nothing else that you need to do.
Yeah, so if you don't have any paperwork that pertains to all the dissolution and the closing procedures, etc., because your company was kind of just set up in a shim-sham way in the beginning, go online, look up this act, look up the provincial legislation, and consult a lawyer so that you can, sort of pinpoint a correct route to do this. So next week we're going to get into part 2, I guess, and that's board and shareholder resolutions. So you're going to see a lot more detail on that. This is kind of just an overview of that, bit of the steps involved and what you need to really be aware of in terms of the documentation, but that one will get a lot more in depth, and you may see some examples of that.
Okay, so once again, this is Ariel
and Jason
from Fix My Books. Hopefully you guys liked this video, and if you did, please don't forget to like, share, and subscribe. Thank you.